know what's wild? The credit card industry has this whole system set up where the very act of trying to fix your bad credit can actually make it worse. I'm talking about something called a hard inquiry. This is basically when a bank pulls your credit profile to decide whether they want to approve you or not. And here's the thing that nobody tells you up front. Every single time that happens, your credit score takes a hit. Every hard inquiry is recorded on your credit profile and takes points off your credit score. We're talking anywhere from 3 to 8 points knocked off, sometimes more if your credit is already in rough shape. So imagine you're sitting there with a 580 credit score, desperately trying to rebuild, and you apply to 5 different cards hoping one will say yes. Well, congratulations, you just lost up to 40 points before anyone even approved you, and now your chances of getting approved anywhere else just got significantly worse. My name is Mandy, and in this 2-part video series, I am going to show you how you can get credit approval even if you have bad credit. This will genuinely change the way you approach rebuilding your credit. So stick around to the end of this video and consider giving me a like and subscribing to this channel. If you already have bad credit, you can't afford to stack up inquiries on your credit profile. There's a whole category of credit cards out there designed specifically for people with bad credit, and some of them will let you see if you're approved without doing any damage to your score whatsoever. No hard inquiries. Let me paint you a picture of how this usually goes. Meet Sarah. She's sitting at her kitchen table late on a Tuesday night, her laptop open in front of her, a cold cup of coffee beside her. She just checked her credit score for the first time in months, and her stomach dropped when she saw it. 547. She's got medical bills from last year that went to collections, a couple of missed credit card payments from when she was between jobs, and now she's trying to figure out how to climb out of this hole. She starts Googling credit cards for bad credit, and she finds a bunch of options that all claim to specialize in helping people rebuild. So she picks one that looks decent, fills out the application with all her information, hits submit, and then she waits. A few minutes later, she gets the email, declined. And just like that, her credit score dropped another 5 or 6 points for absolutely nothing. No card, no approval, just an additional hard inquiry on her credit profile. Now here's where it gets worse. Because Sarah is frustrated and determined, she goes and applies to another one. Same result. And another one. Same result. Before she knows it, she's stacked up 4 or 5 hard inquiries in the span of 3 months. Her score has tanked even further, and now she's in a worse position than when she started. This happens all the time, and it's incredibly frustrating. But here's what most people don't realize. Not every application has to work this way. There are banks and credit card companies that will let you check your approval odds first, using what's called a soft inquiry or a soft pull. This is completely different from a hard inquiry because it doesn't affect your credit score at all. Think of it like a preview. The bank takes a quick look at your credit to give you an idea of whether you'd be approved, but they're not officially pulling your full report yet, so there's no penalty. If they come back and say no, you just move on without any damage. If they come back and say yes, then you can decide whether you actually want to proceed with the full application, which would turn into a hard inquiry at that point. The key here is control. You get to see where you stand before committing to anything, and that changes everything when you're working with bad credit and can't afford to waste points on denials. One of the biggest names that does this is Capital One. Now, I'm not here to tell you that Capital One is perfect, because they're not. Their interest rates can be pretty steep, especially for people with bad credit, and their fees can add up if you're not careful. But the reality is, they're one of the easiest issuers to work with when you're trying to rebuild, and their pre-qualification tool is genuinely useful. You can check whether you'd be approved for one of their cards without any risk, and if they say yes, you'll see exactly what your credit limit would be and what your interest rate would look like before you officially apply. That kind of transparency is worth taking advantage of. Another option is a company called Upgrade. They offer a card that functions kind of like a hybrid between a credit card and a personal loan, and they can approve you for limits up to $5,000, even if your credit is in bad shape. The way it works is you use their pre-qualification tool to see if you're eligible, and if you are, you can move forward with the full application. If you're not, you just got valuable information without taking a hit to your score. The catch with Upgrade is that they do charge an annual fee, and their interest rates aren't the lowest out there. But if you're someone who needs access to credit right now, and you've been getting denied everywhere else, this can be a viable path forward. Then there's Prosper, which operates in a similar way. They'll let you check your eligibility with a soft pull, and if you qualify, they can offer you a card with a limit that could go as high as $5,000, depending on your financial situation. Again, not the cheapest option out there, but when you're rebuilding credit, the goal isn't necessarily to find the best deal, it's to find an approval that won't make your situation worse. The common thread here is that all of these options give you a chance to test the waters without diving in head first. You get to see if you'd be approved, what the terms would be, and whether it's even worth pursuing before you commit to anything that would show up on your credit report. Before we wrap up this part, I want to talk about a few things you should be careful about, because not every bad credit card is created equal, and some of them can do more harm than good. There are cards out there that market themselves as second chance options. These are cards specifically designed for people who've had credit problems in the past, like bankruptcies, defaults, or consistently low credit scores. The idea is that they're giving you a second chance to prove you can handle credit responsibly. And while that sounds good in theory, many of these cards come loaded with fees that make it almost impossible to use effectively. I'm talking about cards that charge you a monthly maintenance fee, an annual fee, a program fee, and sometimes even a fee just to increase your credit limit. When you add all of that up, you could be paying $100 or more per year just to have the card, and that doesn't even include interest or any purchases you actually make. These cards prey on people who are desperate for approval, and while they technically do what they promise, they report to the credit bureaus, and they accept people with bad credit, they're designed to extract as much money from you in the process. My advice is to avoid any card that has more than 1 or 2 fees, and definitely avoid any card that charges you money before you even get approved. If a company is asking you to pay money up front just to process your application, that's a red flag, and you should walk away. The other thing to watch out for is applying to too many cards at once, even if they're soft pull options. I know it's tempting to check every single pre-qualification tool you can find just to see what's out there, but you need to be strategic. Pick 2 or 3 that seem like the best fit for your situation, check those, and then make a decision. Don't turn this into a scavenger hunt where you're applying to 10 different places in one day, because even if most of them are soft pulls, the ones that aren't will stack up fast, and you'll end up right back where you started with a lower score and fewer options. So that's the first major strategy, using soft pull pre-qualification tools to check your approval odds without damaging your credit score. These tools give you control and information before you commit to anything, and when you're working with bad credit and can't afford to waste points on denials. But soft pulls aren't the only way to protect your score while getting access to credit. In the next video, I'm going to show you a completely different approach that doesn't involve any credit check at all, not even a soft one. And it's one of the most reliable ways to start rebuilding, no matter how bad your credit situation is right now. If this video helped you understand something you didn't know before, go ahead and give it a thumbs up and subscribe to this channel, because part 2 is going to build on everything we just covered. I'll see you there.